Circle. Okay. So good evening, everyone, or good morning, good evening, and good afternoon from anywhere you are currently. Um, this is Softjoe here on your screen again. Um, Apparently, we are just going to do a study session with just a few minutes, then we can we can go back into our activities to continue on our personal sessions, our personal reviews before the new week. So I made a post today and concerning I made a trend today concerning I think let me just do a review about that. Let me explain something about that. I also make the video is also available on YouTube for more explanation. And I made that video in respect to um, why people get bothered, why the current let me say this, the current system currently evolving in the space, it's key level, as many people have heard, key levels. And many people want to also want to understand how it works clearly. And there are also some hidden truths behind it over the back end. And with a little kind of study over time, you'll be able to find out personally how these are being um, please mute your mic and off your video when you come in. So you begin to find out with a little study on how these are being um, these are being connected to what you are doing. So I think I talk about the part one of about the key level manipulation, and I think I'll just give a brief understanding. I explained that what a key level manipulation is what the point whereby price that whenever you see price, the idea, the logical um, intent of every key level is for price to decide to go to a direction, maybe to take off a buy or sell, where decision point are being taken. But when you see price go deeper to take out the high or the low of a key level, what really occur at that point is that price has taken out liquidity, price went to grab out liquidity. And there's a reason I'm bringing that subject out because many people find out, many people always get pissed why price go deeper and take them out and go to a direction. There's a logic behind it that price always wants to grab liquidity, and there's really a point where price can that level is still valid, which I'm going to explain on the next trend and give also some video example. So you can see, but what's the intent of every key level? Price is to what make decision to go to a direction. Price is always wanting to what make decision to go to a direction. You get that? Price is always wanting to what make decision to go to a direction, either to the upside or to the downside. There are only those two directions of the market. Upside or downside. The emerging market is just a point where price just try to what have a balance, trying to get a balance. At the end of it, there's always be two directions, to the upside and to the downside. So in understanding that aspect, need also know that every key level, when we have price, like I was giving an illustration that when we have price, when we have a key level, either a resistance key level, a V-shaped key level, or support key level, or open close key level, or that bearish or bullish, the intent of price is to just have a reaction and move. When price decides to take out the high or the low, there's a gap of what liquidity, and that level is still valid in the future. So that's just a little about a recap on. So let's go back. Let's just go into a deep study on what should be done today. So today, today I just want to talk about it. You guys have seen me over time. give a logic where price talk about the how I trade the aspect of key level. Everybody has a logic behind key level. People trade from the weekly, from the monthly, from the daily, to the 4 hours, to the 1 hour, to the 15 minutes. People also trade to the 5 minutes. You see, everybody has a system whereby they follow consistently to make them, so it's just a system that makes them understand a particular subject. And until you go through and find out that system personally or what you really want, you might not really get your head in the market. Your head in the market is not just the strategy you are being taught. It's what you have found out personally over time that works for you. I don't know if you get that. So it's what you have what find out over time that makes your head. That's just a little pep talk. So you see me what trade about. I talk about I use the third kind of model in that is in correlation with the key levels and liquidities and structure. The logic behind it is not just a name, just to call it a new strategy. No, the logic is just I use what the third candle of every 4 hours to what in alignment with structure and also with liquidity for what the purpose of getting my entries and what are my exits in the direction of the market currently at that point in time. So this happens on a daily report, and I do it always. So what do I mean by that? I will explain that over time. People, if you are following, yes, you will get to know that the third candle of every day is very significant. That is the 4 hours. The third candle of every day is very, very significant for me. For me, it's very, very significant. Why do I say so? Because it gives you an intent of what the next candle or the next move of the day is going to be. Because actually, we have 6 4 hours candle of the day. We have 2 for Asia based on sessions. We have 2 for London and we have 2 for New York. In accordance, understanding that some people add a system whereby they trade the Asia session, and why people have a system whereby they trade the London session. My whole system is just to understand what really happened in the beginning of London. That gives me a reaction or a proposition of what is going to happen, our intent of what's going to happen in the remaining part of the day. I don't know if you get what I'm saying. So the third candle is just, it gives an intent of what price is going to do. And there's a cycle. We have the cycle that moves. We have the cycles. I tell my people under me that the understanding of knowing the cycle of the movement, or the structure of that day gives you an edge of what is going to happen. Because key levels, when price starts from a key level, it must end with a key level. When price starts with a liquidity, it must end with a liquidity. That is just a basic part of how the structure is being done. Price starts with a key level, it must end with the key level. Get it? When price starts with the liquidity, it must end with liquidity. That's when we have the concept of CLT and when we have the concept of key levels to key levels. So let's go to the chart. So the third candle of every day is very, very important for me. And I think let me remove this so that we see, my premium 2 is not available. So I'll just use something. So in respect to all this thing, I have personally I'll make it very, very simple. It's a blueprint for me over the time to give. I have 4 entry models. Apart in particular, you understand this third candle model because when you understand the cycle of the market, where price is coming from and where it's going, there are 2 things price tends to do with structure from the third candle. You see that price is pin it and put it to note it. There are 2 things price tends to do from the third candle of every day. It's either price want to give you a continuation. These are things I don't want to bring out to this outside, but basically we are studying and I want to just chip it out. There are 2 things price tends to do when price is coming from the third candle of every day on all pairs, either crypto, is that Forex, derivatives, anything. There are two price want to do from the third candle of every day. Is that price want to continue the structure of the market currently happening before time, or price want to end the structure and start a new structure on that aspect. So it can be a reversal or it can be a pull trend, dependent on what the market is doing currently. I don't know if you get what I'm saying. So now let's just dive in chat. Let me see. Let us touch some things and you see what I'm saying. So now this is BTC, the 4 hours time frame, and let's see what happened. Let's currently see what happened. Because every remember the third count of every day. So the best way to identify your third count of the day is just on your Asia to differentiate. So like you can see, this is my Asia indicator. So it differentiates to me that the 2 candles of the day is for Asia. The third candle is what? The third candle of the day is what? The middle candle, that's this one. And what, there's the fourth, there's the fifth, there's the sixth, and the day ends, right? They end. So every third candle of the day, the best way for to differentiate it is to just to put your line, and there's a time base on it. Every pair has the time. Crypto has the time base of every third candle closure, and currency has the time base of every third candle closure. So the idea is to wait for the third candle to close, not what, not when it's printing. You wait for the third candle to close before you knowing what to do, what price is going to do next. So what does the third candle do? It gives you an intent of what price is going to do next. That's just it. It's as simple as this. Is very, very logical. It what gives you an intent of what price is going to do next. I don't know if you are getting me. So in having that understanding, it's very, 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 very simple. So if you look how you indicate it, what the third candle of every day, you can see also this or where is the third candle of the day, and we had Tuesday third candle of the day. You can see that's out. Even today, you can see third candle is up. Okay, this is the third candle of the day. You can see. So now, how do we explain this? How do we bring this into clarity? So I told you there are 2 things price want to do after the third candle. We expect price to what? Continue the structure currently happening, or it's what is wait for price to change the structure and give us a structure currently happening to follow. So is that price to continue or what? End the period, end the structure to change the to what? To not give us a new structure. And there are those 2 points where price is going. Is that we buy or sell? So look, you understand? So there are 2 points. Is that we buy or sell? So let's say we are already buying and part of to continue. The third candle must give you an intent to continue. That it wants to continue, or it wants to end for a new structure or bias towards, or a new structure for sell to continue if you are buying. That's just it. So now let us see. Look at this. This happened on Friday yesterday. So see what happened. I told you the price must come to a key level, and with the key level, price must come from liquidity to liquidity. Currently, you can see that price at this point was being bearish. We have the recent breakout. All these things align with structure. We don't have to get against structure. We need to follow what price is doing currently, but also pay attention to what the third candle is saying. So now we have a structure here currently. We have price give us a recent breakout to the downside. You can see from our chart. This was BTC yesterday, and what we had price. This was the third candle of the day. So what was the signal the third candle was giving? Where is it coming from? So let me move this line. You can see that the third candle was coming from a bearish open close, right? And it must end with a bearish open. It must end with a key level. So it's coming from a key level. What's the next idea? It must end with a key level. So where's the nearest key level I'm looking for price to end? I'm looking for price to come to this point or this point. So it must really, really end, give us a sign that it wants to end the key level at most. So when you know the direction of the market based on the nearest point of your entry and exit from the 4 hours, what is the next time for it to go? Actually, it's 30 minutes. We go to the 30 minutes. This is what me and my guys do often. We go to the 30 minutes, the 4 hours, 30 minutes, 4 hours, 30 minutes in all realignments. And we have 4 entry models over time. In every week, price must give out the 4 entry models every day. It's either I give one in that 4 entry models, it's either price gives one every single day. But in that week, it must give alongside the entry models. I'll show you an example on gold this week. So let's just see this aspect and I'll show you what happened on gold throughout the week. So you can see that the direction of the market is to continue. We know that price was coming from a key level. and it must end the key level. So the top candle gives us an hint that, oh, currently what's happening, we should end the key level. So this, let me just put the line. So 5 a.m. on Nigeria time, if you are using UTC+1, you can see UTC+1 Lagos, you can see that price is coming from what? Price is coming from, so the timing is from 5 a.m. to what? 9 a.m. in the morning. So it means that we don't have business to what happened after. I don't have business on the chart on this BTC until after 9 a.m. That's after 9:30. So let's see, after 9 a.m., I wait for 9:30 candle to start printing. Then I start looking for my entry models according to what I've been laid on. So there are entry models I've listed, I've given my team, and it's a blueprint already. Firstly, we have the must be liquidity that must be taken. So let me just explain the entry models. One of the entry models that happened here on BTC. So you can see 30 minutes so the line you can see, so after, so by sorry so you can see on this day, so you can see I cannot just really expose the entry model, but something must happen. So you can see on this was 9:30. So our business was happening from 9:30 to the downside. There must be liquidity that must be taken. So what do you see price do? Price was just going to a direction. So it gave us, it turned to bearish by 9:30 back, but there was no reason for us to enter at this point. But since we have our target has not been met, price gave us a reason to enter. You can see price took out liquidity and gave us a break. So where would have been my entry point to enter? This key level, and you can see, and that was entry from that point. There must be a liquidity that must be taken to continue that trend, or a change of structure to continue to give it. That's so my exit point was still that point, and you can see our price came to that point and exits from our, even though price went deeper, but the logic is to know where price is, the nearest point price is going to exit. Know your cycle. It's a cycle, it's a sequence. So from key level to key level, from liquidity to liquidity, it is bound to happen over time. I don't know if you get me. So let's just go to gold and let's see what really happened over the week. And I think we should be enlightened by all these. Okay. All right. Yeah, really 4 entry models I really have, and I'm sorry if I cannot be able to list everything on this study session, but it just give you a clue of what price is going to do. So based on structure, I think let me just remove all these. So I think this was Monday to yesterday. You can see. So let's just remove this. So you can see. Let me just explain how the sequence of the 4 hours works. You can see this was Monday on gold. I really pay attention to gold. Let's say by what you see that the top candle starts from 7 a.m. in the morning to it end by 11. I think by 11 a.m. I'm always on the chart on SAUSD every day. So this is how I trade. So I follow the process over time, over the blueprint I was giving to myself and my people under me over time. So you can see that the top candle of that day, price was tap on it. You see the direction, just coming from a key level. First, you're experiencing structure currently on that day. You can see price was tapped on this key level. Okay, it pushed. Okay, the top candle also tap on that key level. Now it closed in this point. It means that price must end the key level. So where's the nearest point of key level? You can see this should be the nearest point of key level. And where's the nearest point? This should be the nearest point of key level. So you have 2 points you are targeting as your target. At least a key level. That is your target. You already know your target already in 4 hours. Now you should look for your entry. And on this day, I think, so you can see, I think one of the entry model that happened on that day was, you can see we had a sweep, and you see the entry model. I have a PDF where I explain all this to my guys. Let me show you. So this was the entry model. This was the entry we took that day. Or most of them took, while most of them missed. So you can see we had price also, you see liquidity was taken, and we have push. Most of these setup are continuation entries. That's continuation setups all the time. You can see this entry, target, and price move to the target of the day. You can see, and price triggered. and price moved to the target. This one of our entry models. One of our entry models. And price moved to the upside. The same thing on Tuesday. So you can say on Tuesday price just did 30 because it was a higher. I just have to smile. So even though we have all these things stuff, there are always losses over time. There are also losses. So we don't just because price is nothing is 100%, but it gives us the risk management on it is very good. So look at it. You can see also on Monday, this was also a clear setup on even CR2 model, normal liquidity model. But why the price go to this point? I don't know. But price tends to do what you want to do because this was the target. You can see the top count of the day was here. So you were already buying before. See, price was buying, and the price cannot keep buying. There must be a set. So that day, a set structure showed up clearly, and it was part of the model also. By 30 minutes, you can see. And also with CLT model, price also did that thing. You can see that after 11:30. After level 30, you can see price came here, took out, gave us a little breakout. My entry was around this zone. Or at least this liquidity week around this point. And see how price just came back and still came and tapped on that point. My exit was there on the same 4 hours. But the reason why price came and smashed us and still came to our direction is bound to happen. Not all the time. This like one of the loss of the week. So it bounds to happen. The same thing on Wednesday, the same process over time, following what from the higher time frame to the lower time frame, following the blueprint given. So you can see let me just put that. Let me put the shot on Tuesday so you can see how the loss look like. So you can see this was my entry. I will give a signal to my guys, and we lost. We lost. It was painful, but it's part of the game. So it was my exit to this liquidity week. Yeah. You can see how price validated it. It still came back, tap on that same point, and still moved to the direction of the exit. And that was really where price started selling on that Tuesday. But the logic is just for us to follow what we are doing over time to get results. And on Wednesday was also very, very good. You can see the third candle of the day of Wednesday. Now, I think this Wednesday was really very, very nice, and I took it with the guys live, which I also shared with the community, the video. So you can see it was very, very clear. You can see as price look at the direction. Price was already selling. Price was coming from a key level. You see, I told you 2 things must occur. Put it in the back of your mind. You see that price continue a structure or want to end a structure to start a new structure. That's how it is. So now you can see this third count of day was coming from this open close key level. And where is the nearest key level to end? This was the nearest key level. So what was the logic behind it? It started it and ended it by itself first. So you already know that price has ended. So now price needs to create a structure to go to the upside. For reversals, the logic was reversal. I told my guys the nearest target for reversal. So price took out the liquidity of this. I told them that the nearest target at least this point. This was first target of the day, or at least 50% of this week should be our first target at least. I told them. So we exit on this point here. So I didn't know price was trying to go higher that day, but nevertheless, that day was FOMC. And if we see on 30 minutes or so, so the entry was done in 30 minutes. So you can see the 30 minutes on that day. I think this was the day. What really occurred? You can see price. You can see after 11:30, around that time, we wait for price to change the structure. So price took out the liquidity. But this one of our entry model that I won't be able to say it and look at our price. This was entry that day, and we picked the entry from here. I also shared it. Stop loss was below this, and stop loss was below this. We really want to trade around this point here. So that was that also for that day. And what happened on Thursday too was very, very unique. You can see it, very, very unique. And what was the setup to? You can see the third candle of the day to look at it. What is it giving you? It's giving you what? A vibes to, oh, price was coming from what? Let me show you. Price was took out, let's say price took out this liquidity of this low. Okay, this low was in time. So price tap on that same key level and move. So the concept was that price took out this low liquidity. That was concept, and this high was also taken. You can see price has fulfilled its target already on this point. So we have to wait for price to change structure. So that was it. So 30 minutes change. I told all my students who were doing live that day, and I told them, okay, let's look for sales on that day. And it's also born to the fact that, okay, price took out liquidity and gave us something. And I think the entry that day was this zone here. You can see price continue up to the target of that day. Take out this low. And that was the sale. See that these are basically the move of the day, the continuation move of the day. Is it that price want to change the structure or continue the structure of the day? It's already the move of the day. Then after that day, price can start to range. Most of the time, that's what occurs. After that day, price tends to range. Then to the next day. That's what the third candle does. It looks, that's even the same thing on Friday. You can see on Friday, it gave the signal, it stuff. This was also the entry. Price took out liquidity and gave us direction, and this was the entry. So, and it was put to the upside before market close. So that's just it. The third candle model. Okay. So that's just it. That's just it. And is there any question before we end the session? I think it's just a session. I'm not sure to explain so much. So is there any question before I round up the session? Is there a question? This question, really just raise up your hands so you can meet yourself and okay. Let me check the chat. Is there any question? We have 6 minutes to go. The most of the people here said that they're already, a lot of people on the chat, on the call, that people that really, really follow and over time. So the people I can see here is, I can just see new faces here. So is there any question? I think there's none. So that's how basically how we look for our setup per day. For me, be able to combine two time frames together. Basically, I also use the 15 minutes whenever I don't see something very clear, and that's based on it's just really, really, really. Oh, can you tell us your entry models? I wish I can, but soon as I'll expose it to the community. There's something I'm having collaboration with a good friend of mine next month, and I'm going to give out the entry models. So just stay tuned. I'm going to in a collaboration whereby I'm giving out. I'll give out the entry models. There are 4 entry models particularly, and it's always happened according to the weeks over time. Just stay tuned to then. I can't give it now. This was just a recap, or just showing how the week was. Yeah. So, thank you, Mr. Mike. So, is there any other question? We say, so is it possible to be comfortable with only 2 time frames? Yeah. For me, this is what works for me. And over time, I'll tell you that it works. So it's how you define your own system that it works for you. So for me, it has been working for me over time, giving comfortable for me over time. I don't know if you understand what I'm saying. These 2 time frames alone, but basically sometimes I check also the data to see what price is doing from the higher time frame. But see it, my third candle, if of the day still gives me a what? a decision. So most times I can try to, from a pool of main trend from the daily time frame, want to take a risk entry. Most of these trades you see being taken are continuation entry. They are not risk entry. They are continuation entry. If you see clearly, price is where price is continuing from. So, and the logic is that you must know where price want to continue from to enter. You understand? So, if I really want to just take a risk entry, I have a higher time frame model I look for to what to come to the 4 hours to continue to start. But for me to become an intraday trader, to trade per day, per time, this is what I use basically. Just 4 hours and 30 minutes. Most of the time I check the 15 minutes for confirmation. Like I think there was a day I checked 15 minutes to try this in this week to confirm if I saw a sweep, because most times you can have something happening on the 30 minutes, that price already gave us a sweep on the 15 minutes, but something must occur on, there must be a sweep. For a continuation to occur, price must take out liquidity. It's a logical thing in the market. Price tends to take out liquidity for any price to move to a direction. So there must be a gap of liquidity. It's when you understand that kind of concept, you know that, for price to continue this direction, if price will be buying in the morning, from the morning, you'll know Asia or London session, and price will continue. One thing price needs to take out liquidities. That's where the money is. That's where people have money are. When you know that price liquidity have taken, you look for your nearest point of interest where price will continue from, and you move. So it's possible. It's possible. Is there another question? How can we learn more from you? You can learn more from me from the channel you get. This season I'm trying to bring more valuable content to the channel, because it's already the end of the year and people need to get in order for the new year. So more valuable content to be given. Now, one of the content I gave out today, the parts of the content is going to be mind blowing, because people, what if there's a manipulation? What really occurs? People tend to, price has let me know there's something price has done. That level is still valid. I think let me show you an example. Let me just give you guys an image of what I'm going to do in the part 2. What does it mean when price is manipulated? Let me just give you guys an image. You guys are on this call. You have 1 minute more, so let me just share something. So you can see something here. Look at, let me show you something. When a level is being manipulated, let me show you an example. What is an example I can show you? Where's the example I can show you guys? I need an example clearly here. Okay, let me go back to BTC to show you something before the call end. I think the point where the price, I give an example. I give the example here. All right, you can see. Look at this A-shaped key level that price got validated to the upside down side. It's very valid. But when the price came here to grab at liquidity, this was one of the examples I gave out. What happened? That same key level was still valid. This is the logic. Price tends to, so when price go deeper into a key level and still close above it with the closure, that level is still valid. Price, the next candle can tap and move from there. It's always that how it's done. So when you see price that, just patiently wait. If it doesn't happen the next day, look at this open close. The open close I made the example to. Look at open close level. When price did the same thing, validated it. It didn't happen immediately, but later, what do you see price to? Price tends to